On Business Incorporated today, Guinea military orders the central bank and other financial institutions to freeze all accounts belonging to the government. Tanzania ratifies treaty for Africa Free Trade Area. And Kenya's economy now 515 billion shillings larger after rebasing. Hello and welcome to the program. I'm Chimeze Obi Iwagu. First, the intraday market numbers, and we begin from the African market. Nigeria's all-share index maintained yesterday's bearish close at intraday, was down marginally 0.06%. Meanwhile, the JSE index in South Africa was up almost 0.5%. The market in Egypt is closed on Friday but ended in the negative on Thursday. Kenya closed positive on Thursday, up 0.69%. The Middle Eastern markets are closed today, but on Thursday, sentiments were majorly positive. Abu Dhabi gained over 1%. Dubai also closed in the green, though marginally at 0.03%. Saudi Arabia, the only laggard, lost 0.33%, while Qatar closed positive, up 0.22%. And European markets were cautiously higher on Friday morning, tracking global counterparts as sentiment rebounded following a rocky week. For other developments in the European space, let's talk to Chelsea now. Hello, Chelsea. Good afternoon. Now, German inflation rose to 3.9% in August. That's the highest rate in almost 3 decades. What are the factors that drove this increase?
It's certainly a very dramatic surge in prices that we're seeing not just here in Germany, but really throughout the world. What seems to be driving prices here in August was in large part energy, but you have to keep in mind how they're measuring this. So they're looking at August 2021 prices against August 2020, and in August 2020, the economy here was still very much struggling with the pandemic. So prices were very, very low because demand was so low, especially for things like oil. So when you compare the collapsed prices of August 2020, you do get a much larger increase than you normally would. But there are factors that could make this increase in inflation more permanent, and in large part these supply chain bottlenecks that we're seeing. Many companies are paying more for things like semiconductors or raw materials like wood or metals, and they're starting to pass those on to their consumers. So up until now, most economists have been saying that this inflation spike is temporary, that it's going to fade in the months ahead as things normalize. But certainly there's fear growing that this could become less of a temporary phenomenon and more of a long-term inflation issue.
And the controversial Nord Stream 2 pipeline to bring gas to Germany from Russia has now been completed. What will this new pipeline mean for Europe?
So it's going to mean a lot more natural gas in Germany and in Europe. It's going to basically double Russia's exports to the European Union. And Germany has really advocated for this project despite the controversy, and said that we need to secure our energy supply, especially now that countries here in Europe are starting to move away from petrol or diesel and coal. So natural gas is sort of the bridge to the cleaner energy sources. But it's been a very, very geopolitically difficult project. Russia has gotten a lot of criticism, especially from Ukraine, Ukraine currently is the main route for natural gas to Germany and to Europe. So Ukraine is very upset about this project. They say it will deprive them of crucial fees they get for being the transit route for that. And it's become a much bigger geopolitical problem, even drawing in the United States, which had imposed sanctions on this project. So it's certainly a big question mark of how this is going to impact the geopolitical relations between Germany and Russia and the rest of Europe as this project comes online.
And Germany's finance ministry was raided yesterday by prosecutors as part of an investigation into money laundering in Africa. What more can you tell us about this?
So this investigation appears to be targeting the Financial Intelligence Unit. This is a group that's in charge of investigating financial crime here in Germany, and they basically receive reports from banks about transactions that they think look suspicious, that could be being used for criminal purposes. And this was started after a 2018 payment worth almost about €1 million to Africa that the bank said could be being used for terrorist financing or drug financing. So that report made it to the Financial Intelligence Unit, but they never passed it on to law enforcement. So prosecutors want to know why they didn't do that and whether they've done that for other potential money laundering transactions. But it also comes as the finance ministry is under an immense amount of pressure after the Wirecard scandal, which was the biggest corporate fraud in post-World War II German history. So they've already had to face things like parliamentary inquiries. They've already had to basically overhaul their regulatory capacities, but this is certainly going to put the spotlight on them once again for missing what seems to be quite a large fraud.
Well, Chelsea, it's been a great week with you on the show. I guess it's time to say thank God it's Friday. Enjoy the rest of the weekend. The UK economy grew by just 0.1% in July as the last COVID restrictions were lifted in England. It was the economy's sixth consecutive month of growth, but the increase was much lower than in the previous month, which saw 1% growth. Let's hear more from Juliana. Hello, Juliana. Good afternoon. Well, despite growth slowing to a near standstill in July, Chancellor Rishi Sunak insists the recovery is well underway. Where is he seeing the silver lining?
Good afternoon, Timothy. I think, well, for the Chancellor, I think he's been quoting the pretty rapid vaccination program that's been ongoing. Of course, Boris Johnson's Conservative government also have this plan for jobs, and he thinks that's going to take a turn over the next coming months. But of course, this is not a great performance. 0.1% growth is pretty dire in July. And as you said, that follows 1% of growth in June. I think economists are really looking at the term self-isolation nation, because as you'll remember, during that time, we discussed extensively about the surrounding pandemic, even though people were out and about and lockdown restrictions had been lifted, the COVID-19 Delta variant didn't go anywhere. And there were lots of problems with the NHS app. So many frontline workers in the services sector, which we know is crucial to the British economy, were self-isolating at home. So that really has been reflected in the data. And of course, there are going to be problems in the coming months. We know that government support is now going to start winding down, particularly the very important furlough scheme. Over 1.1 million workers are relying on that. If you've lost your job, are you going to be spending? Of course not. Then there are issues because of Brexit. We spoke yesterday about German imports from British businesses declining severely. And because of the new dependence on China, the global supply chain disruptions is going to be a cause for concern. So hopefully, things can turn around. But I think this is really a crucial point in Britain's post-pandemic recovery.
All right, let's talk a bit about some corporate news there. The battle for the post-pandemic holidays skies has taken a new twist as Easyjet launched a £1.2 billion fundraiser while announcing it had fended off a takeover bid widely assumed to be from rival Wizz Air. Tell us more about this.
Yeah, this is a story I think that shocked investors yesterday. Certainly disappointed Easyjet investors, which is why as soon as it was announced that they had swiftly rejected this offer, their share price was down 15%. I think it closed the day with its share price down at 9%. And the troubles with Easyjet are, going on and on and on. Of course, the aviation industry is emerging from its worst crisis in history. And unfortunately for the budget airline and British Airways, they seem to be doing much worse than their competitors. Wizz Air, for example, they are the Hungarian airline. They are expanding massively across Europe, and they are obviously trying to get as much of the business away from Easyjet as they can. And similarly, with British Airways, that have made a vast majority of their profits from long-haul flights. That's not happening at the moment. They want to start opening back up at Gatwick, which is Britain's second largest airport. But to do that, they're going to have to compete with their prices, which is why they are flirting with this idea of BA Light, which would be competitive enough. But it is a really difficult time. Let's see if there is going to be another offer. But so far, Wizz Air refused to comment, and EasyJet are taking their strides.
Okay, let's look at the numbers and now bring us up to speed with that. And of course, outlook for next week.
Yeah, it's a pretty torrid day for the blue chip index yesterday, hitting a 1 month low. But we end the week on a high. The FTSE very much in the green. The all share is up 0.24%. The FTSE 100 is up by 0.27%. And the FTSE 250, that's up by 0.14%. In the British currencies market, the US dollar, the British pound is up on the US dollar by 0.23%, up on the euro by 0.13%, and at intraday, it's up on the Japanese yen by 0.39%. Next week, there are two big data announcements to be made. First of all is the unemployment data, very, very important. Like I was saying earlier, the furlough scheme is coming to an end at the end of September. Have people been losing their jobs already? We'll just have to wait and see. And then also we are going to be looking at inflation. I know inflation is a massive topic of discussion on the continent. It's still rising here. Some suggestions that it could come in as high as 2.9%, well above the 2% target. So yes, we'll just have to wait and see what the data holds next week, Jose.
Absolutely, we'll definitely keep a tab on those data. In the meantime, enjoy the rest of the weekend. Okay, shares in Asia Pacific rose on Friday as investors monitored Hong Kong listing stocks of firms in regulation-hit sectors such as video games. The broader Hang Seng Index in Hong Kong jumped 1.91% on the day, largely recovering from its more than 2% decline on Thursday. Mainland Chinese stocks closed higher, with the Shanghai Composite rising 0.27%, while the Shenzhen Component gaining 0.49%. In Japan, the Nikkei 225 rose 1.25%, the Topix Index advanced 1.29%, and South Korea's Kospi edged 0.36% higher. The S&P ASX 200 in Australia closed 0.5% higher. In the U.S., stock index futures were higher in early morning trade on Friday after stocks registered a fourth straight day of losses on Thursday. Futures contracts tied to the Dow Jones Industrial Average rose 118 points, and S&P 500 futures and Nasdaq 100 futures were both also in positive territory. During regular trading, the Dow shed roughly 150 points, while the S&P slid 0.46%. It was the fourth consecutive day of losses for each. The Nasdaq Composite dipped 0.25% for its second straight day of losses. It's the first time since the middle of August that a tech-heavy index has registered back-to-back losses. All three indices are on track to end the week in the red. Our second quarter earnings season is largely in the rear view mirror, but earnings reports are still trickling out, with Kroger on deck before the opening on Friday. On the global oil market, prices dipped in early trade on Friday, heading for weekly losses of nearly 2% after China announced it would release oil from its strategic reserve, and some U.S. airlines key to a recovery in jet fuel demand are warned of a slowdown in ticket sales. U.S. West Texas Intermediate crude futures fell 8 cents to $68.06 a barrel, after dropping 1.7% on Thursday. Brent crude futures fell 12 cents to $71.33 a barrel, extending a 1.6% drop from Thursday. Both settled at their lowest since August 26 on Thursday. And more to come on the program after the break. Do stay with us. As developing and poorer countries continue to struggle to get vaccines, Western countries have been asked to stop stockpiling of COVID-19 vaccines. Former British Prime Minister Gordon Brown, who is a United Nations Special Envoy, has accused rich countries of committing a moral outrage by stockpiling COVID-19 doses while poor countries are struggling to get supplies. Western countries are hoarding nearly 300 million shots, while only 70 million people in Africa have so far been vaccinated. Let's have this conversation with the Chief Narrative Officer at Clio's Advisory in London, Ted George. Hello, Ted. Good to see you. Good afternoon.
It's good to be back.
So tell me, how badly would you say it's been with West Africa with COVID-19? How badly has West Africa been affected by COVID-19 compared with other regions of the world?
Well, in fact, Africa has done relatively well. There have been 3 different peaks. There was one in July last year, there was earlier this year in January, and just recently over the summer. But the reality is that we're looking at around 40,000 cases a day, and even at the peak, around 1,000 deaths a day. That's the same as we saw in the UK during the peak. That's the UK versus Africa. So on a global level, actually, it hasn't hit Africa as badly. And probably we're looking at around 4% of deaths in the world, even though Africa is around 16% of the population. So clearly there is some resilience in, and particularly West Africa as well, for COVID up to this point.
Now, vaccines rates are low, but how serious an issue is this for West Africa in infectious rates and deaths are not low?
Well, I think this is the interesting thing, is it appears that Africa has really managed to get through COVID quite well. I mean, it has been hit economically, obviously, trade, business, severely disrupted, and travel as well. But West Africa has the experience of Ebola, which, it knows now how to handle pandemics. There is much more of an outdoor culture. A lot of people spend time in the outdoor in the sun, which is much better for reducing transmission. And there might be some genetic component here as well. But the reality is that COVID has not been as lethal as in the Americas or Europe and Asia, and therefore it is not the same kind of health crisis it's caused, at least to date.
Now, Gordon Brown recently accused Western governments of stockpiling vaccines and charged them to ship vaccines to developing countries. How do you view Mr. Brown's statements?
Well, the thing is, I mean, it is a fair accusation because there are 300 million now vaccines. There may be 1 billion stockpiled by the end of the year. And that's even taking into account the booster shots that they plan in Western Europe. I think the problem is it's a lot about distribution and logistics. A lot of these vaccines, particularly the Pfizer, they have to be stored at very low temperatures. You need actual special equipment for this as well. Other vaccines like AstraZeneca, so much uncertainty is being spread over them for different reasons around the world that there are people who don't want them to be imported. So it is complex. But if you look at COVAX, which has these commitments of 4.5 billion vaccines for the world, they plan to distribute 1.2 next year. So there is a real move on this front. But I think it's a very fair question to say that vaccination has just really not been at the rate in the developing world that it has been in Western markets.
Now, when is West Africa likely to get enough vaccines to start large-scale vaccination of its population?
Well, this is a big question because I think the real thing that has been the experience where the COVID has hit really badly in other markets is the necessity as soon as possible to vaccinate the most vulnerable. So people of a certain age, people with certain health conditions. That's probably one of the most important things. So it is quite possible that quickly, provided these people can be identified and the vaccine can be got to them, they could be vaccinated. Because the vast majority of Africa's population is very young. A lot of it is, in fact, under the age of 16 or 18 and probably not at risk to the virus. But there's always variance. So the fact is, I think there's a good chance that any potential damage variants could be reduced if the vulnerable are vaccinated relatively quickly in the next 6 months.
Now tell me, how serious a threat do the new variants of the disease in West Africa, and what impact do you think it could have on the region?
Well, this is the big unknown. I mean, there's already been a Nigerian variant, which is very similar to other variants around the world. But the fact is, as we've seen with the Delta, it's starting now to attack more younger people. It's proving much more easy to transmit as well. It changes the whole time. So just to assume that it's going to continue being not as difficult in Africa is not the good assumption. But I think there is already ingrained in the way the people work and the governments work in West Africa a knowledge of how you deal with pandemics. And there's a very strong sense of society society and social support, certainly in a lot of the communities across Africa. So I think that certainly West Africa is well positioned to deal with this, but I don't think there should be any complacency, because a really serious variant could set everyone back to square one.
Well, from the look of things, it seems COVID has come to stay with us. So it's just for countries to find a way to deal with it. Thank you very much, Ted. As always, we do appreciate your time.
My pleasure.
And in Guinea, the military has taken over that took over the country earlier in the week through a coup, has ordered the central bank and other financial institutions to freeze all accounts belonging to the government. Military officials said the freezing of the accounts was necessary to secure the country's assets. Transactions for all accounts belonging to public administrative and commercial establishments by ministries and the deposed administration will be suspended. This also includes accounts used for presidential programs and accounts owned by members of the deposed government. Guinea's economy experienced strong growth over the past decade, mainly due to a mining boom in the region. Despite the increased wealth, people in the country are still living under deplorable conditions, which have been blamed on rampant corruption. And Kenya's economy has expanded by 515 billion shillings than earlier thought after it was rebased to capture new sectors whose output had grown in recent years. The review of national economic data, commonly known as rebasing, increased 2019 GDP in nominal terms to 10.2 trillion shillings, up from 9.7 trillion shillings. This was much lower than the 25.4% jump when Kenya rebased the economy a decade ago, that increased 2013 GDP from 3.6 trillion shillings to 4.3 trillion shillings. The country's Economic Survey 2021, released on Thursday, shows Kenya's economy contracted by 0.3% in 2020 compared to a 5% growth in 2019 as it took a hit from the COVID-19 pandemic. Accommodation and food servicing activities, education and professional and administrative service activities recorded significant declines in 2020. The report says that employment in the various sectors of the economy was adversely affected by containment measures instituted to curb the spread of COVID-19. And Tanzania has ratified the agreement establishing the African Continental Free Trade Area, effectively joining a pact connecting countries with a total gross domestic product of $3.4 trillion. Minister of Trade and Industry and Trade made the announcement via Twitter, noting the country has joined a market of 1.2 billion customers. AfCFTA was first opened for signing in April 2018, but came into application in 2019 after the requisite minimum of 21 of the 55 member states ratified it. Tanzania had not formally joined, although former President John Magufuli signed on the agreement in 2019. After signing, parliamentary approval is required for ratification of the agreement. The ratification is an indicator of President Suluhu's intention to return the country to regional integration. An African Development Bank has approved a $137 million loan to support Botswana's economic recovery from the COVID-19 pandemic. The funds, extended under the Bank Group's Botswana Economic Recovery Support Program, will be used to enact multi-sector reforms that will increase spending efficiency, create jobs, and drive inclusive growth. The project has three components: enhancing domestic resource mobilization and mitigating fiscal risks to enhance macroeconomic performance and create fiscal space for spending on social safety nets, supporting private sector-led agriculture and industry to bolster productivity and value addition and increase job opportunities, and offering business development services to micro and small enterprises to advance social protection and gender equity. The bank group's active portfolio in Botswana amounts to $81.9 million and comprises 4 projects. And that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Wago.